I said when the national debt hits 35 trillion next year, which I think it will, at a 6% rate of interest, annual interest payments on the national debt would exceed the national defense budget, welfare, and education spending combined. Can you imagine spending more on interest on the national debt than defense, welfare, and education combined? Now, if interest rates went to 8%, which they would have to do just to equal the current rate of inflation, then interest on the national debt would exceed what we spend annually on Social Security, national defense, and education combined. You see the problem here? Debt is spiraling out of control, and it's going to crowd out all the other government spending. In fact, the last tweet I made on this subject was the following. At the rate the national debt and interest rates are rising, before the decade ends, interest on the national debt will exceed 100% of federal tax revenue. That would mean the entire federal government would then consist of just the Treasury Department, which would collect taxes and pay interest on the debt. Basically, the U.S. government would be a conduit from taxpayers to bondholders. Now, obviously, this can't happen. At some point, something has to give. And I think that something already gave. I think it gave on Friday morning. And that's why I think the Fed folded with this soft pivot. And again, the reason I'm saying it's a soft pivot and not a hard pivot is because the Fed is still on the trajectory of hiking rates. I just think it shifted into a lower gear. And so that in and of itself constitutes an easing. Even if the Fed is still tightening, if it's tightening less aggressively than the markets had thought, then it's an easing. It's a forward guidance that is easing conditions a little bit and telling the markets, hey, you're too tight. You're pricing in too many rate hikes because we're probably not going to have to hike as many times as you think. The terminal rate is not going to be as high as you think because we're already making good progress. Now, that is all BS. They're not making good progress, but they have to say that because there's no real alternative. Now, the way this pivot was telegraphed to the markets was through a Wall Street Journal reporter who basically said he had it on good sources that the Fed is going to be indicating that future rate hikes will be somewhat smaller than what they had previously indicated. So maybe we'll have one more 75 basis point rate hike, but then going forward, there'll be 50 or 25, or who knows, maybe the next rate hike won't even be 75 basis points. It might be 50 basis points, especially if we keep getting economic data like the economic data that we've already got this week. Just to give you some examples of what the Fed is dealing with. Yesterday, we got the October PMI, and the composite index came out at just 47.3. That's versus 49.5 from the prior month. Anything below 50 is contraction. So that indicates that we're in a recession. The manufacturing numbers dropped from 52 in the prior month down to 49.9. So manufacturing in recession territory. The expectation was for 51.2. Now the service sector, which is an even larger part of the dysfunctional U.S. economy, that was supposed to hold steady in contraction territory. It was at 49.3 in the prior month, and October was supposed to come out identical to that number, but instead we dropped all the way down to 46.6. That is deep in contraction territory. It surprised even the most pessimistic of bears because the range of forecasts for the service sector PMI was from a low of 47.5 to a high of 49.7, and we came in below the low end of that range. So this is very difficult for the Fed because they are hiking interest rates into a weakening economy. Another indication today of the weakness of the economy was the consumer confidence numbers for October, which unexpectedly dropped way more than expected. The prior month was at 108, and that was actually revised down a tad to 107.8, but the consensus for October was 106, and we came out at 102.5, way below estimates. And again, the consensus range went from a low of 104.5 to a high of 110, and again, we came out beneath the low end of expectations. So why are consumers becoming less confident? Because the economy is getting weaker as consumer prices are moving up. So we get stronger inflation, weaker economy. This is bad news. In fact, it's not bad news in and of itself. A lot of people think that confidence is important because consumers need confidence to go out and borrow and spend. I think consumers will borrow and spend even if they lack confidence, because the one thing they'll do is borrow and spend. That's kind of the American way. Unfortunately, the reason Americans will stop borrowing and spending is because they're broke and they don't have any more credit and they just can't afford to keep doing it. And I think that's really what's going on. So it's not that consumer confidence is going to lead to less spending. I think that less spending has led to less confidence because the people can't go out and buy the things they need or the things they want because they can't afford it anymore. And in fact, another indication of how bad things are right now is how well Republicans are now polling in the Senate races. In fact, the Republicans are now favored to win the U.S. Senate. Now, this is another prediction I made. I think just a few weeks ago on my podcast, I was looking at the predictit.com website. And if you bet Republican, it was about 45 cents. If you bet Democrat, it was 55 cents, meaning that the Democrats were favored to win. And so you would have won more money if you bet on the Republicans to take control of the Senate than the Democrats. Well, as I'm looking on that website right now, to buy the Republicans to take control of Congress, it's 66 cents. And the Democrats are all the way down to 38 cents. So the Republicans are now a bigger favorite to win the Senate than the Democrats used to be a favorite to win it. So it's been a complete reversal, and the Republican lead in the House of Representatives has increased enormously. If you want to bet that the Republicans win the House of Representatives, you have to pay 89 cents, which means all you can win is 11 cents. But on the other hand, if you want to bet the Democrats, it only costs 12 cents. So you make not quite 10 times your money if the Democrats win. So they are a complete long shot to win the House, and they're an underdog to maintain control of the Senate. So it looks like the Republicans are going to flip both the House and the Senate. And the reason that I made that forecast a few weeks ago when the Republicans were still behind in the U.S. Senate is I was confident that the economic data was going to get worse as we got closer and closer to the election. And ultimately, this is going to be a pocketbook election. Like former President Bill Clinton said, it's the economy, stupid. You can even narrow it down in the 2022 midterms, it's inflation, stupid. And when the election is coming down to inflation, well, the incumbent party is going to lose because the voters are going to blame who's ever in charge for the inflation. Well, the Democrats are in charge of everything. They've got the White House. They've got both houses of Congress. So how could they blame the Republicans? They won't. The Republicans have got a great issue to run on, and that's inflation. I think the secondary issue is crime. Crime is going up probably as fast as consumer prices, and that's also a big problem that voters are going to blame on Democrats. In fact, Republicans typically own the crime issue, and the bigger the threat that crime represents, the more likely voters will look for a law and order type party, and clearly that's the Republican Party. So when you got high inflation and high crime, that spells high turnout for Republicans, and moderates or independents are going to be more likely to vote Republican during these circumstances, and so we're likely to see the Republicans control both houses of Congress. Now, what does that mean? Other than the fact that it's indicating that the public is upset and they want to throw the bums out and replace them with potentially a different set of bums from another political party, while I'm happy that the Republicans are going to take control of Congress, I'm not optimistic that it's going to do anything, because what are these Republicans going to do? Yes, when there is a Democrat in the White House, Republicans do have a better track record of pushing back against spending. When you have a Republican, like when we had Donald Trump, well, the Republicans in the House and the Senate were rubber stamping increased spending under Trump. They have a tendency to push back against spending in another party. But if the economy continues to weaken, as I believe it will, as the recession gets deeper, and now the Republicans are also eyeing the White House in 2024, they are not going to want to get in the way of government programs that are designed to stimulate a weak economy. And so they're likely to compromise with Biden, and we'll get the worst of both worlds. We'll get increased government spending, but we'll also get tax cuts. So we're going to have expansionary fiscal policy on two fronts. The government's going to spend more, and they're going to collect less in taxes because the Republicans won't support more government spending unless they get tax cuts. And Biden's going to say, well, I'm not going to support tax cuts for the rich unless we get more government spending for the poor or the middle class or whoever. And so we're going to get this bipartisanship, which is going to be very dangerous for the economy and for inflation. And the trends that are in motion now are going to accelerate after the midterms when you have this bipartisan mentality